Hey everyone, hope you're having a good day. My name's Andy, channel's Finding Value. I am trying the old mic again. I know you guys didn't like the new one. It's probably too echoey in this room, and it is too echoey. So let me know if this is any better. Anyway, we're going to go through Twitter. We're going to look at what's going on and what people are talking about. I'm going to interject my financial opinions as we go along. We do have quite a bit of random stuff today that follows commodities, goes into financial stuff, real estate, all those things. And again, if there's anything that I can do for you guys, check out finding-value.com. That's where I've got all my information is on there about this commodity bull market that we are in. We're in a pullback right now, and that will resume with the housing starts. So we'll get into all this stuff. So here we go. Again, it's at finding_finance. If you want to follow me, and you can go over to the website if you'd like. So Lynn Alden says, restaurant sales are rhythmic to an oddly precise degree compared to other economic indicators. A dip in Jan-February, a rise in spring-summer, a dip in autumn, a brief spike in December. So we've got this, but here's one thing I want to talk about, all right? We've been kind of trending, but look at this trend, guys. We've got, if you were to throw a line in here and do a linear regression analysis, you get a trend line that kind of comes up like this. Then you get another trend line that's coming up even more. And now we're kind of going exponential. I mean, look at how much further these moves are going as we're coming up. Is this all going to reverse? I don't know. It's just more data on retail sales for restaurants and other eating places. This is just more data. This doesn't look like a recession to me. A recession is when you break the trend and go lower, or it kind of just rolls over to some extent. This is going up quite dramatically there. This is restaurants and other eating places zoomed in, and you can see the cyclicality of this and how it's kind of getting bigger and bigger as we go. So I thought that was kind of interesting to check that out. Ferg says, waiting patiently and doing nothing is the most important skill in investing. Second is being able to say that's enough in a boom and happily sit on the sidelines watching others get richer for a while. So this is what you need to do if you're in a bull market. And I would say especially if we just started one. In the beginning of bull markets, you get the largest pullbacks, and they're usually the longest, unfortunately. But that's what we're doing here. We are exercising our patience in this commodity bull market. Second is being able to say it's enough in a boom and happily sit on the sidelines watching others get richer. It's basically taking your money off the table while others may still be making money in a, we'll call it a crack up boom or something like that. I think that's happening in technology. It did happen in 2020, 2021. We could see it go up again. That's very well possible. But given where the valuations are, given all of these videos that I've done, if you guys go back and watch them, commodities are definitely the spot to be from a value perspective. And I think the market conditions are changing for commodities to continue that outperformance. Casey says, this girl, she says, the American dream has changed. People do not want to go to college, get a good job, and own a home anymore. They want to create passive income by making more money, working less, and experiencing life. Agree or disagree? And the only thing I'll say there is, isn't this the goal of everyone? That they want to create more passive income by making more money, working less, and experiencing life? I don't know anyone, or at least myself, where I actively want to work harder for my money. So I'm not sure what exactly she's trying to say here. It's not anything profound or like that, or anything profound there. So yeah, I don't know. Kind of interesting though. This is absurd and won't continue. So what do they say? It says cumulative global sector fund flows towards technology away from energy last 12 months. So energy's been heading lower. Technology's been going up for the past 12 months. When we look at this real estate cycle, if we go towards the end of the real estate cycle, so the end of the real estate cycle is when we go into that hyper supply phase. where we've got a bunch of inventory, we build too many homes, and then we crash from a deleveraging event. After that event, money flows into technology and it flows away from these other ones. What if the market at this time, as we're going through what is my opinion, the mid-cycle wobble, and I think we're going to get going back into the strength of the real estate market. If that's the case, I think people think that we're at a different location in that real estate cycle and money has flown into technology, which generally works after a deleveraging. And energy works during the real estate cycle. I think they've got it backwards. I think we're going through a mid-cycle wobble, and I think energy is going to come back with vengeance, and I think technology will struggle. Based off of historical moves in relationship to the real estate market, inflation, and credit expansion. So I want to talk about that. I think a national average house price decline of 200,000 is reasonable at this point, given interest rates. Upcoming recession would bring us close to 500,000. And I don't know if he's talking about the U.S. market or the Canadian real estate market. What I want to say is, how does this guy talk so confidently? He's like, oh, the national house price, yeah, we're going to decline 200K is reasonable. I hate to say it, but you know how rare it is to get a huge decline like that? I mean, to be that strong and that kind of, I'll say, confident in a prediction like that, when basically in history, 99.9% of the time that doesn't happen. So he's gonna bet on 0.1% of the time, based off of crappy data of interest rates and an upcoming recession. At least my opinion. Home prices generally are strong in an increasing interest rate environment. We have no homes in inventory, and this guy thinks that an upcoming recession is going to impact that. I think that house prices are going to go up. I think interest rates could remain elevated, and I think a recession is also possible. I think it can happen simultaneously. And I think house prices go up, interest rates can stay elevated, and a recession happens. So two very different viewpoints. And I wanted to share a different viewpoint, at least this guy's viewpoint, which I disagree with. At least in the short, 1, 2, 3 year time frame, at least. Home builders going insane on new housing starts in May. 1.631 million new homes underway. Building permits up 5.2% month over month. So that's the data there for new housing starts. We were at 1.4 million housing starts. So we really went higher to 1.631 million, which is a gigantic boost in housing starts, guys. This year is what's driving that real estate market boom. And I do have some data to show you guys what that looks like from a graphical standpoint. Gold. Grady says, the perfect gold storm is here. I'm 100% confident these well-chosen words by Grady are true. And so I remind myself, the present is the point of power. Since April 1972, I have never seen a PM market more filled with such potential. History is being made. And we've got the gold price. Looks like this is volume here. We've got stochastics, MACD, moving average stuff on the bottom there. So that's what he said. Says we are seeing what can be expected at this stage, i.e. central banks taking turns debasing and fiat currencies plummeting with regard to precious metals and purchasing power. The perfect gold storm is now here. So stay long, guys. That's my opinion. I'm going to stay long in my gold and silver and platinum. The volatility, yeah, it's a pain sometimes, but I'm a believer in the data and the thesis and the real estate cycle and all of those things. So I'm going to stick the course, stick to the strategy. This is Amy, and I just wanted to show this. This is another opinion here. Obviously, I disagree with a lot of stuff she says, but huge housing starts beat why? Builders have a business to run. They have to build and sell homes or they don't make it. I'm sorry, but that just doesn't, this doesn't set well with me. And I'm going to be kind of harsh. That's what I think someone who doesn't think very critically, just someone who thinks surface level with a bearish tilt, that's what they're going to say. They'll buy down rates or offer incentives. They're doing what they need to do to survive. If you put a fish in water with sharks, its choices are try to swim to safer waters or stay still and die. It swims, they build. I disagree. People have to be there, and you're going to have willing buyers. In a commodity market, you don't really control the market. The market controls you. So I think that she's giving too much credit to the home builders that they have some sort of control over this. It's a demographic that's larger in a underbuilt market, and they can sell homes. It's that simple. If this was the case, then you'd still see a decline in housing starts and a decline in new homes completions. But we're not seeing that. I'm sorry, Amy, but I think you're wrong. Housing keeps rebounding. As housing goes, so goes the economy. Yeah, housing is rebounding, and what do you think the economy is going to do? It's probably going to turn up. And that's where a lot of people are going to get it wrong. That is if, housing starts remain above 1.4-ish million. If it remains above 1.4 million and continues to creep higher, well, then your economy, I think, is going to do the same thing. Says maybe lumber wasn't right. I thought that was funny. Had to talk about it. I've talked about lumber before and how the signal got jumbled around during 2020. And I think the market's trying to basically catch back up and balance itself. It undersupplied, then oversupplied, and we got to balance this thing out before we can use that metric with a degree of certainty or a high degree of probability of success. So I think lumber needs to calm down before we can say it. It's kind of like, I don't want to go and give too much of an analogy and dwell on it too much, but I think lumber needs to basically calm down. Here's the top uranium producers by 2022 production. We've got Uranium 1, Orano. That's a Chinese company. Camco, Navo, Kazatomprom, another Chinese CGN China company, and BHP. I think a lot of people forget about BHP. Camco produces 5.7 thousand kilotons or 1,000 tons. BHP produces about half that. So, that's something to think about. BHP pays a big dividend, and it's a diversified mining company. And it produces uranium. I used to think wealth was a sports car, large house, high income. Now I think wealth is empty calendar, location freedom, financial independence. I agree with this. But I will also say I like sports cars, not the show-off, expensive sports cars. I just like driving, man. I really like driving. You could probably put me in anything, and I would enjoy it. I seem to have settled on the RX-8 and RX-7, the rotary cars, just because they're so cheap. And I know the RX-7 has gotten expensive. I bought mine in 2011, but I have an RX-8, and it is very cheap. I can find parts all over the place. And if you're always looking for parts, it seems like there's always willing and able sellers that need to sell something for a very good price to keep that cost down if you want to drive it like a true sports car on the track and stuff. So, yeah, just wanted to talk about that. It says, no correlation here, and obviously they're kidding. If U.S. debt is going parabolic from here, what will gold price do? So this is gold price and U.S. debt. You can see that we went off the gold standard and we went way up. We went sideways until we became undervalued. We shot back up again, became undervalued, shot back up again. Look where we are right now. We are still undervalued. We're about where this high is here, but the debt continues to grow at an exponential pace. So the debt growing and the problems that the Federal Reserve are in, the conundrum they're in, What conundrum are they in? They're in the conundrum of deficit spending that the government's doing, which is going to increase the debt. Or they're going to hold those, if they hold the interest rates up to increase the debt, well, they're not purposely doing it, but the deficits increase with the higher interest rates to control inflation. If they bring that back down, then you're to meet the deficits, basically lower the interest payments. They're going to spark inflation in the system, which also rotates money into gold. So they're just in a very difficult spot. I don't know how they're going to get out of it. Coming down, so we've got Patrick Karam here. He says gold and silver miners not able to hold their ground versus the SPX. So he uses the gold, the chart ASA, and I think that ASA has been just absolutely pathetic. But it is interesting to see that we could see a break to the upside on the SPX versus ASA. So this is conflicting data, and this chart does look very good for the S&P 500 at this time. Will it break out? We'll find out. That's one to watch. So get out of there. Hello, inflation. It was nice knowing you. European inflation is essentially gone, just a matter of a few months now. One thing I want to talk about, so these guys talk about, oh, inflation is gone. So inflation is the rate of growth. It's basically year-over-year growth. So how fast are prices going up in terms of year-over-year growth? What I'm saying is this came through, but it left a bunch of garbage in the system. What that means is prices aren't going back down. They are just not going up as fast. And we went up dramatically in a bunch of different things. Food prices, car prices, home prices, everything that you can basically think of, I think, has gone higher. Car parts, if you're a car guy, they've gone higher. Brake pads, whatever it is. They're not coming back down, I don't think. At least not in a meaningful way. So, yeah, the inflation is essentially gone, but I'm going to say it left a bad taste in everyone's mouth. I'll just say that. Copper futures back at $3.90, moving in the right direction. It was moving higher this past day. But yeah, that looks a little bit better. JC says another 756,000 ounces of silver out of the COMEX vaults today. Paper shorts seem to be oblivious to this fact that crushing future prices will only further bolster record deficits, leading to sharply higher prices in the near term. Yeah, so we continue to draw down inventories across a whole bunch of different commodities, silver being one of them. Mid-cycle downturn complete, according to this guy. This is the beginning of the big move where the bulk of millennials enter peak family formation and home buying. Creative financing starts here, ends with 2007-style programs, likely built around minority status. So this is shocking housing starts. Economists blown away by 11 sigma beat after biggest monthly surge on record. This guy is right. We are at a mid-cycle downturn complete. What that's called is the mid-cycle wobble. This guy thinks that that is complete and that we're at the beginning of where the bulk of the millennials enter peak family formation. And again, creative financing is going to start. So we have a long way to go in this housing market that a lot of people, I think, are on the opposite side. So I agree with him. I do agree. Mortgage specialists at a big bank put a 70% probability on mortgage rates being 5.65% at the end of this year. If that is true, it's going to increase the demand for homes. And if there's no existing homes, where are they going to go? They're going to go to new homes, Andy. They're going to go to new homes. And you know what that's going to do? It's going to increase housing starts. It's going to increase new home sales. And we will see more credit expansion of all loans in the system. That's going to be exactly what the real estate market cycle is basically saying. And that's their tailwinds behind commodities going higher. That's the big market condition. We've got YouthLink. He's talking about Camco. It says the 100% measured move for this massive long-term fib extension is a 5x from here. We still need to do a 5x from here to get to that one stage level, and we can see that we've got a nice big breakout here for Camco. We're continuing to break to the upside. Go Camco. What I have here as well, real estate cycle still intact. Housing starts surge most since 2016. Real estate over Powell at this moment. Here's the big move higher, looking at it from a chart perspective. Moving on up. Moving to the other one, it says housing starts surge most in 2016, exceeds all estimates. And then the next one is, again, we have a surge on the right-hand side here of that for housing starts. Big old surge. Coming on down, it says, have a look. It says there's only been 4 times in history that U.S. stock have a rolling 10-year Sharpe ratio greater than 1. The rolling 10-year Sharpe ratio of U.S. stocks. And what I want to say here is, every time this declines, guys, it's been a commodity bull market, basically. We declined, this was the 60s, commodity bull market happened towards the bottom here. We're come back down. This is from 1999 all the way down to 2008. Sharpe ratio was declining. We are declining right now. The Sharpe ratio, I think, if I can remember that correctly, is your returns versus your risk. Think of it as your returns versus the interest rate on bonds. Just think of it that way. But we could decline here. Every time we've basically declined, that has been the same market conditions for a commodity bull market. So that's the increasing inflationary environment, increasing interest rates, and that commodity bull market real estate cycle. It's all of these in an expansionary phase of real estate. Grady says, here is another currency pair which is very correlated with precious metals movement. So this is the Australian dollar to US dollar versus platinum. You can see the correlation here. And the Australian dollar to US dollar has been moving higher. I know we've had some weakness in platinum, but they're generally highly correlated. And he thinks that they're both going to go higher. I also think that as well. And the commodity bull market usually occurs when the Australian dollar outperforms the US dollar. So everything, all these charts are all in alignment. It says, Logan, it's housing 2008 all over again, crying, hold my Diet Coke. The housing bubble boys blew it again. Sorry, I just had to say that. Again, Grady, it is important, I think, to have the clean and clear charts to only include what really matters. So for gold right now, one only needs one single trend line still holding. Still holding, correct. Just like oil's still holding, gold's still holding, and we've got our housing starts starting to kick back up. There's going to be a lag. Housing starts move up. There's a lag between that housing start and what comes in the markets. But remember, the markets are forward-looking. And what I mean by a lag of inflation. The inflation numbers will be lagged behind it. And that's the 21.7% beat in housing starts. Wow. So I'm going to end it there, guys. That's where I kind of ended it before. That's what I've got for today. Give me a thumb up if you guys enjoy the content. Subscribe to the channel. Check out my website. I do have some memory coming in for my computer, so hopefully that can smooth out any glitches that I'm having with this computer. I've been eating up a lot of my memory, it looks like. And hopefully that fixes some of the things in terms of buffering and stuff like that. So I've been having a little bit of trouble there with the computer a few times now, so I'm trying to fix it. All right, guys, we'll catch you later. This is Finding Value.